The Reserve Bank Monetary Policy Committee meets today to make its final decision of the year on interest rates, and an announcement is expected this afternoon. Now, the meeting follows higher than expected consumer price inflation in the month of September, and the bank will have to take this into consideration. CPI climbed again to 5.9% in October from 5.4% in September.
Inflation came out closer to the upper end of the Reserve Bank's target bracket of 3 to 6%. The higher inflation level reduces the room for lower interest rates anytime soon, as the central bank uses higher interest rates to try and cap the rising inflation. Food inflation remains elevated at 8.8%, with the highest price increases recorded for vegetables and sugar and sweet products. The price of petrol went up in October by R1.14 per litre, while diesel went up by R1.96 per litre.
Food inflation, for instance, food prices are very dependent on seasonal factors. And we've seen recently egg prices rising quite significantly because of the specific problems within the poultry industry. We've seen significant increases in potato prices, for instance, because we've had droughts and severe flooding in other areas. So lots of those seasonal factors impacting on food prices. In terms of transport costs, of course, we've seen significant petrol price increases.
Experts say despite the higher than expected inflation data, the Reserve Bank will likely keep the repo rate unchanged, as inflation is expected to slow going forward.
Even though this inflation figure turned out to be higher than expected, they will look beyond that and will leave interest rates unchanged. But what it does show is that there is a danger in being overly optimistic about interest rates coming down anytime soon. There is now going to be a fear that they will raise the interest rates tomorrow. I don't believe that will be the case, but at the same time, it is a warning that one must not be overly optimistic about interest rates coming down too fast next year.
Inflation is expected to average 6% this year and to slow to about 5% next year before edging towards the midpoint of the target bracket in 2025. This means that while interest rates are not expected to rise further, unless if inflation risks materialize, interest rates will likely remain at current levels for longer. Gloria Sefako Musi, SABC News, Johannesburg.